I just want to, I'm sure we all know who these gentlemen are and about their companies, but let's still take a minute just to kind of explain about themselves and about the organizations that they lead. Stefan, if you want to just kick off. I think we kind of know who Euronext is, but maybe you can just give us a little quick summary of the extent of Euronext.
First, welcome home, because this building was the home of the business the management team of Euronext does run now. It used to be here for more than 200 years, and the business of exchanges exists at least in many European countries for 300, 400 years. We left, my predecessors left this building something like 20 years ago, and we are now headquartered at La Défense, but this is where exchange business used to be operated. Today, Euronext is a company that operates the exchange of Paris, Brussels, Amsterdam, Lisbon, and recently Dublin and Oslo. It's a business that aggregates a consolidated market cap of 4.3 trillion. It's massively bigger than all the other European platforms. Just to give you an order of magnitude, Deutsche Börse operates a market of less than 2 trillion, and London Stock Exchange a market of about 3.5 trillion. So this is the largest aggregated market, with average daily volume around 8 to 9 billion euros per day. And this is a federal organization, completely private, with 21% of reference holders, including Euroclear and some sovereign funds. But basically, we belong to the market. And our job is to make sure that we are the home sweet home for listing companies that seek growth resources, the home sweet home for investors who need liquidity, and the home sweet home for all the ones who want to buy something which is fungible and standardized from people who want to sell it. And we are highly regulated because we do something very big. We put a number in green or in red on the screen, and the rest of the world calls it price. So we'd better produce a real price, and that's why we are super regulated. So it's the final job, the final purpose of the company is to fix the problems of the ones who have too much money, and the problems of the ones who don't have enough money, the ones who are desperate to sell something, and the ones who are desperate to buy something. And it's embedded into a very heavy technology construct. I'm sure we'll come back to that point, but fundamentally, since it's all about exchanging information in a trustworthy, credible manner very quickly, it's all about technology. So the teasing is that we will discuss, I guess,
we'll come back to your technology.
The technological transformations that happen.
We'll come back to your technology in a moment. So Javier.
Okay, so yeah, well, good afternoon, everyone. And well, yes, as Swift is concerned, so we've always been around for a few years, actually a bit more than 40 years. We were created, I mean, now we are in a fintech event, so talking to fintechs, the problem statement of the creation of Swift was very clear. Set of banks in a few countries had to create a technology platform that would allow them to transact across borders, so international payments, trade, and FX, at a later stage, post-trade securities transactions as well, and do that in a obviously efficient and highly secure way, with high availability of the platform and through international standards. So that was the problem statement. Many of you, being fintechs, you have your own. And as you now, we also had, as Swift 40 plus years ago, our set of challenges to overcome to get there. It was clearly the road wasn't easy. I mean, obviously, and in a sense, we could say back then, because we're a technology company, I don't think there were many created back then, but one of the original fintechs could be Swift in that regard. So fast forward 4 years, clearly, like actually all of us here in the panel and many incumbents out there, it's not because you've been in business for a few decades that you have not leveraged like many incumbents out there, the successive waves of technology evolution, of digitization of the market, and to an extent, our at Swift, like many others, our business model has evolved, including data analytics and others, but also our technology has been completely renewed.
We'll come back to these. I just want to get kind of like a brief kind of outline of your businesses and yourselves, and then we'll kind of move on deeper about the technological challenges and solutions that you've come across over the years. So, François.
Hi, everyone. Good afternoon. So I'm François Riahi. I'm the CEO of Natixis. Natixis is part of the BPC group, Banque Populaire Caisse d'Épargne, which is the second largest retail bank in France with 22% market share. Natixis is a listed company with BPC owning 72% of it and gathering all the businesses of the group that are not retail banking. So namely asset and wealth management, where we are managing around $1 trillion globally, corporate and investment banking, insurance, and payments. That's the four businesses that we have. We also are still controlling COFAS. And we have so different trends in these different business. I think we will come back to it.
Okay. Vladimir.
I'm CEO of Alfa-Bank. Alfa-Bank, and I doubt all of you know a lot about Russia, but Alfa-Bank is the largest private-owned bank in Russia, with approximately $50–60 billion of loans issued. And Alfa-Bank has been in Russia for 30 years. This year we're turning 30. So sounds like an incumbent, right? At the same time, Alfa was always on the edge of digital technologies and digital transformation. And 15 years ago, it was the first bank in Russia to launch internet bank. More than 10 years ago, the first mobile banking app in Russia was Alfa-Bank, more than 10 years ago. Right now, if you log into App Store, you'll see that our application is the highest rated in the world among all financial organizations. Like you can really check it now.
In the world? In the world.
Check in App Store. Yeah, this being incumbent on one hand, an established player, and being a digital leader on the other hand, at the same time gives results. For the last 2 years, we grow 20–25% in terms of clients. This year, our client base in Russia increased by 1 million individuals, and we return 15–14% ROE to our shareholders year after year, year after year.
Okay, and so you said you're celebrating your 30th birthday this year.
30th birthday this year.
Forgive me, François, if you said it already. How long has Natixis been around for?
Sorry?
How long has Natixis been around for?
That's difficult to say because, so if you take BPC, there were two fintechs created 200 years ago and 100 years ago.
So 100 years ago at least.
But Natixis is the result of the merge of different companies. So I would say we're not young.
You're not
Even if Natixis under this form is only 11 years old.
So it's 11 years old in its current form, but you trace your roots back like a century or something like that. Okay, and Javier, you said you're like 40-odd years old?
47 years old.
47, just a little bit older than yourself, perhaps. So.
Yeah.
And Stefan, Euronext original.
Depending, the business is quite old, 400 years, 300 years, 200 years in Oslo. The company under the name of Euronext was formed as an incorporated joint venture of Brussels, Amsterdam, Paris in 2000. It was under US occupation of New York Stock Exchange between 2007 and 2013. In 2013, there was a decolonization process where we were re-IPO'd in 2014. So we are independent since 2014 under the Euronext name. So it's a fresh company. And by the way, since you're asking the question, the company was IPO'd 5.5 years ago for 1.4 billion euro market cap at 20 euro per shares. And it's now, yesterday, it had a market cap of 5.6 billion at around 80 euro per share. So in 5.5 years, we have quadrupled the market cap with hard work. Because what we do, in addition to the core exchange business, is that we have worked hard to diversify our revenue base. We are going to probably discuss that when we touch on technology, but we generate a lot of revenues on advanced market data, in selling data, in selling post-trade services, in selling corporate services. Basically, one of my obsessions is to diversify away from the central order book-driven business, which is always at risk considering the multiplication of the Ubers that are eating our lunch in this industry.
Well, what I think I wanted to start off with, I mean, I know Javier was talking about you being perhaps one of the original fintechs, so then perhaps we'll start with someone else on this one. But when people think, forefront of digital technology, of innovation, name a European company in finance that's like at the forefront of technology. Unless they're kind of, working within the industry, the chances are they're not going to say Euronext or Swift or Natixis. They're probably going to think of a fintech. They might say Revolut. They might say someone else or whatever. So I suppose, I mean, and Stefan, I mean, you guys have been around so long. You've even got a museum in your headquarters, right?
Yeah, but again, in 1989, the Paris Stock Exchange was the first one to fully electronize, as they used to say at this time. Basically, we would say today, digitalize their business. And we should never underestimate what it meant at that time. At that time, technology was expensive, servers were expensive, and it's very easy to digitalize flows of new shares, of new IPOs, or everything. But put yourself in the shoes of those guys when they had to digitalize the stock of paper that was involved, make sure that they have never forgot that not everything is digitalized, and that was a big thing. So, but it was done in '89. Then we moved to dissemination of technology across the members. And there was something magic, because when people talk fintech, they tend to focus on technological disruption. But whatever you want to do in our business, which is material and real, has to work on two legs. You need disruption, basically technology becoming cheap, and regulatory changes. You need a space for you to exist, to leverage the tools that are available at cheap price so that you can benefit from lowering barriers to entry. Lower barriers to entry on technology price and lower barrier to entry on regulation. And that's what happened with MiFID I and the opening up to the competition. So all sorts of Ubers enter our business, and that developed the famous high-frequency traders. And today we have a new development related to that parallel development of lower regulation and cheaper technology with the boom of passive management of ETFs. ETFs are enabled by lower regulation, Ubers, and cheap technology. 30 to 40% of trading on some stocks are done by robots and algorithms. And that's why, by the way, you don't see such a big move on stock price when you have big strategic event, because robots don't look at CNN, and there is an inertia to capture zero strategic events. Normally, with the Chinese situation, in the old good days, where only human beings were acting behind their screens, you would have much more massive impact in markets. But today, the robots and the algorithms just look at the tangible impact on the crisis, as they do for the trade war.
I want to bring in, I mean, Francois, you're obviously operating mainly out of France as well. Would you share that view that you need this kind of disruption, you need technology to become cheaper, and you need the regulators to kind of, to help maybe drive you forward to become more kind of digitally minded?
Sure. Of course, I concur with Stefan on that. I think part of our business, and clearly, for example, if you take asset management, Stefan named ETFs. It's a complete change in the industry. So, for example, we are not part of it, but it's very much about cheap technology. Just to react to your question and the way you phrased it before, I think the frontier between incumbents and fintechs is not that clear today. If you take, for us, if you take our payments business, 50% of our staff members are within fintechs. Fintechs that we have bought or fintechs that we have built. And 50%, so it's very significant. Second thing, I'm just seeing...
What about the other 50%, sorry?
The other 50% are the ones that are doing the processing for the retail networks. But of course, there's a lot of cross-fertilization between fintechs that find some robustness. Because if you operate in the payment system, the challenge is to have, in the same time, robustness and innovation. Because if you lack one of it, you cannot exist and you cannot prosper. So you need both. That's why we have decided to have a strategy which is really to have fintechs embedded in our business model. And so we are, of course, incumbent, but also fintechs. And we are not integrating them completely. We are leaving them some space, some room for maneuver, but they can leverage on our global strength, on compliance, on processing. They are leveraging also on our scale.
So to kind of get the best of both worlds from their perspective. So Vladimir, I mean, you said you've always kind of been very kind of technologically focused from the off. I mean, would you share that view that there's a very fine line between, say, you? I mean, the one that I guess springs to mind in Russia would be Tinkoff as being a kind of digital-only bank that there isn't really much that divides you in terms of the technology that these fintechs have that you compete with.
In this sense, Alfa-Bank is a fintech. You cannot imagine how developed our technologies are. And in general, there are several very strong players in Russia, including ourselves. And don't take my words for granted. Go to Russia, see. There are common misconceptions about like vodka, sanctions, Siberia, like undeveloped economy. Some of this may be true, yes, but please separate this from how developed our financial market is. Just a couple of examples. In absolute terms, number of payments with smartphone in stores, like you take a smartphone, it's like contactless payments. In Russia is bigger than anywhere in the world. Russians pay more with smartphones than Chinese, and our population is 10 times smaller. One fact.
Like the absolute numbers, not the proportion.
Absolute numbers. Absolute numbers. Our central bank, and I applaud our central bank, the best central bank I've ever seen. No,
I don't know if they're in the audience.
I doubt. I doubt. Maybe actually, but they created this fast payment system, and right now anybody in Russia can pay, make a transfer person to person using cell phone number. For example, I come to buy flowers to my wife at the market. I ask the cell phone number from the seller. 2 clicks, done. Payment is done. So very, very profound financial system, and Alfa-Bank is in the forefront. 80% of my client database is, you probably heard this term monthly active users, MAU. 80%. I think in Europe, the good would be like 40 to 50. So 80% of 6 million clients use regularly their mobile banking application. And I can continue with these examples over and over. But it's don't take my words for granted. Our doors are open, and if there are banks or other players here interested, please shoot me an email. We'll organize a reference visit. You'll see.
Okay. Well, Javier, I mean, you said that you like one of the original fintechs. I mean, maybe the whole premise of this panel is kind of misplaced in the sense that if you're all kind of technologically advanced, that you may as well just be described as a fintech, or everyone's just a financial services provider.
Well, listen, and I'll come back to François' point here, because I completely agree. I completely agree with you on the fact that when we look at innovation, and by the way, that is what being in the market, what being actually now a grown-up fintech tells you, is that you innovate, but you innovate responsibly. You innovate taking into account the foundations that you've built and what you've learned over the years. And talking about payments and in the international payments ecosystem, I completely agree that it both needs to address the customer needs and unmet needs in the market, and that's why you have a whole host of disruptors getting into that space around complexity, cost, transparency, predictability in the end-to-end payment chain. And that's why, as far as we are concerned, together with our banking partners, we've now launching a new instant global network that will allow, at the end of the day, every bank to transact account to account in an instant and without any friction in the system. But that is important. Speed is important, and this data exchange is important and exposed through APIs so that banks can provide these banks with fintechs these great services to end customers. But the underlying foundations around stability, risk, resilience, and the whole series of compliance checks, SAMSOS, KYC, AML, cybersecurity, fraud detection capabilities, these are essential. These are as important, maybe less visible, but as crucial, so the foundations need to be right.
So I suppose, I mean, it'd be good to know, I mean, if you guys are all so advanced technologically, if you were to start your businesses from scratch today with the technologies available today, which of course you're also taking advantage of, what would you change in the way that you go about your businesses? Francois?
Well, first, I think that what Javier was saying, and also Vladimir, I think we also have we are challenged by fintechs, and that's also an explanation of why we have moved and invested and I would say innovated. So I think the fintech world has pushed us also to innovate more, and I think it's something that is visible in what we have been describing. Now, to come to your question, of course, for an incumbent like ourselves, the question of the legacy system is something that is a very important element. Clearly, to have the right data management, the right data quality, with systems that we have been developing over decades, is probably the biggest challenge we are facing.
Okay, and Stéphane, I mean, I know you build all of your technology in-house, and you've obviously invested a lot of money, a lot in that technology. Would there be things that you would change if you were kind of to start from scratch?
Well, actually, we went through that process a couple of years ago when we started from scratch. A new technology stack, a new technology platform called Optic, where we reinvented the architecture. The main weakness of large financial institution, and by the way, that was a sickness within Euronext too before I joined, and the beauty of not being an engineer and a tech guy is that you look at things in a clinical manner without any legacy. But the problems that every financial institution has is that you pile up patches on systems because nobody dares to say, okay, let's have a pause and reinvent everything from white page, because then you say, pendant les travaux, la vente continue, during the work stage, you have to continue sales, and everyone is panicking about that. So you pile up patches, you get complexity, and then the more you pile up patches and the more you get complexity, the more complicated it is to undo it or to do something in parallel. And that's the scariest thing in managing tech. I want to echo massively what Javier and Francois said. We use the same word, technology, to describe two fundamental different worlds. One world, for us, for you, is an infrastructure. And our right to survive, our right to exist, is determined by the fact that we provide a super robust, super reliable, super steady, super fast, super transparent, vis-à-vis the regulators, service at any point of time. And that requires a certain approach of technology where your risk appetite is super low, where you do everything with umbrella, suspender, helmet, condoms, everything. So that because you have to deliver to the market something they can trust in a very transparent manner. And that, to do that, you need certain people. But if you do only that, you just survive and exist. Now, your right to grow depends on a completely different world where you need to innovate, to testing, to fail more than you succeed, to have different type of people. There is a big human element because you need to have within the same organizations Neanderthal and Cro-Magnon, because the guys who handle the robust platform are not the same as the hipsters who want to come with their dog at the office and for whom a baby foot is more important than the bonus, and so on. So those guys are very different. And for me, the main challenge is to organize the breeding between those two different cultures. Because this other world of innovation is so important, but very slippery. And the way we do it at Euronext is very simple. And again, because I wanted to be an archaeologist, and I didn't understand anything about technology. I tried to make complicated things simple, so you avoid big mistakes. And we have characterized any idea that comes in my desk on technology innovation. I have 3 categories. Either it's buzz, and basically the sort of bullshit of the week. Either it's an enabler, which is going to massively improve the way we do things, like blockchain for documentary credit, which is basically as powerful as what email with the options copy to and attachment was for documentary credits, which was an enabler to telex in the 60s and 50s. Or, third category, is it really transforming your business? And the reality is that if you define transformatory or transformational innovation as something that if you own it, you can eat the lunch of a competitor because he cannot survive without that innovation, or if my competitor has that technology, he can eat my lunch and kill me, then that's really transformational. In this respect, blockchain is not transformational to many businesses. It's a very powerful enabler for certain segments in certain businesses. But you need a sort of discipline about characterizing what innovation is. Otherwise, you follow the crowd, you are suffocated by buzzwords, and then anyone who comes to your door with a big, my name is John Smith, and I'm the king of artificial intelligence, and then I need a 6-digit contract, then you are dead. So the discipline on characterizing what is infrastructure, what is innovation, and within innovation, what is buzz, what is enabling, and what is transformational, is the core for surviving, because we invest a lot of money. 1/3 of the cost base of Euronext is technology expanding.
Stefan, I'm glad you mentioned blockchain, because obviously those of you who were here last year will recall Javier's predecessor having a nice face-to-face with the CEO of Ripple. And I'm just wondering if I mean, you talk about stability and the need to have this technology and innovation, but at the same time to be able to offer something that is basically rock solid, that does not ever fail, and that is never going to kind of, cause you trouble with the regulators. Is that, as kind of the original fintech, let's say, as Swift, is that something that, if you like, is the biggest barrier to entry, and why perhaps you're not so concerned about these other startups that are trying to kind of nibble around the areas of what you're doing?
It's not about being concerned or not. It's about looking at the ecosystem in a way to address the challenges and expectations from end customers right now. All the challenges that we're discussing around that are met today around complexity, efficiency, price transparency, and so forth. I think because of many trends and many angles over the past few years, technology evolution, but also regulation, pro-competition regulation, such as PSD2 in Europe, open banking further afield, the advent of APIs, new technologies as well as like DLT. We see the ecosystem a little bit more kind of a salami slicing of the ecosystem. There are more players in the chain that can contribute to an end-to-end better customer experience by using these technologies, and by, let's put it that way, one that is clearly paramount and taking a lot of traction, APIs that have been there for a while, but now they're being adopted broadly, of course, with open banking. And how we see that at Swift is that we know that the underlying foundation, the infrastructure, needs to have the highest level of security resilience, as I said, but also needs to be instant. We're talking about instant payment systems at the domestic level, at regional level, of course in Europe, with tips, but further afield, actually in every country right now, if not already available, being deployed. So the interoperability of all these domestic payment systems needs to happen in an instant way as well. And that's where, together with the banks, we can make it happen at a utility, as kind of a utility play, with rails that are instant, but also that take all the friction from the system. And with all this data richness, taking account as well of compliance and cyber, we expose this data through APIs to upstream in the chain with banks, of course, in partnerships with fintechs, PSPs, new entrants, and at the end, the end-to-end experience goes to new levels.
And Vladimir, I mean, in Russia, as you said, you've got a very progressive regulator, but at the same time quite conservative in terms of allowing risk-taking. For example, you still can't, I don't think you or Tinkoff or anyone else can trade crypto or CFDs or things like that.
No.
So when it comes to kind of, being disrupted or staying ahead of the game with your own technologies, what for you is it the regulator that kind of is the biggest barrier to entry? Is it just your own mindset and your own kind of, determination to invest in technology and stay ahead of everyone else?
I cannot think of the barriers, and I was thinking about your previous question about what would change. There are no barriers, and yes, our regulator is very strict, as any regulator, but they create opportunities. There are, as I said, several players, 5, 7, who push the competition very hard. We compete very hard, and we change a lot. And I agree with what Stefan said, that discipline is important, and especially for infrastructure providers like stock exchanges, SWIFT. But I think that flexibility is much more important, and what determines Alfa-Bank, for example. In fact, Moscow is only 2 hours away from Paris, so it's 2 hours difference. And I've been here yesterday, today, and I'm listening to what's been discussed, and I think it's 2 years, at least closer to 5 years, time zone difference between what's happening right now in financial Russia and in financial Europe and the US. From my Stanford years, I remember we used checkbooks and snail mail. They still, each time I come to California, they still use checkbooks and snail mail.
They still use them in Tel Aviv as well, I can tell you.
Really?
To pay your rent, yes.
Yeah, but for Russia and for Alfa-Bank, digital is already a past. We live in we call it in a post-digital era. Yes, 5 years ago, all these technologies made a lot of things possible, everything moved to mobile, but right now we think more about phygital world. I'm not sure you heard this phrase, phygital. It's a combination of physical and digital. And it's like, think about it, Airbnb or Booking.com. They create a perfect digital experience on the website. You can select everything, all the filters, preferences, pictures, everything, perfect digital experience. But then you need to come to this apartment or to the hotel and have a great physical experience, like to live there, nice bed, bottle of wine waiting for you, or Tinder. You can upload as many nice pictures, right?
Tell us more.
Yes, but then without a physical continuation of this digital experience, it just doesn't work. So, and we do believe in this phygital concept as something as the next thing.
So, would you say that the kind of Chinese are still more advanced than the Russians? That you kind of sit somewhere between the kind of Europeans and the Chinese, or you're more advanced than the Chinese?
Ernst & Young recently published a research where China is number 1 in terms of financial development of the system. Russia is number 3 with like 2 points difference. I would say we're equally advanced. We just went different paths, and Russian path is much more common for European guys, and that's why I'm always surprised how much Europe and America talk about China, Chinese fintech, how to copy it. It's impossible to copy. It's different culture, different mentality. Russia went the European way. We've been there where most of the European incumbent banks right now 5 years ago. Just come, see, copy Alfa-Bank or some other strong players.
Okay, I think it's also interesting, not just that you're all incumbents in inverted commas, but we've got kind of different ownership structures here. We've got Alfa-Bank is privately owned.
Privately.
Natixis is publicly traded. We've got SWIFT, which is cooperatively owned by your users basically, and Euronext, which is also publicly traded. And I'm curious to know if the ownership structure, in other words, for example, having to report quarterly to show the growth that's expected by the markets, or being owned by your users, or perhaps being owned by just a very patient, benevolent, wealthy individual, if any of that impacts your ability and the time that you have to innovate.
Actually, big times. I think one of the competitive edges of Alpha is being private. No bureaucracy, full support. Our shareholders, they very demanding people. And they're very supportive. They know what they want, and as soon as management delivers, they support. We make all the decisions as fast as possible, changes as fast as possible. 1.5 years ago, we're in a full transformation of the bank, completely changed the organizational chart, metrics, implemented customer journeys, etc., etc. Full support, we did it within 3 months. I cannot imagine of a state-owned bank doing it within a year. And it does affect the speed of change.
François?
Well, I think it's a good point because as you know, as a bank, as an asset manager, we have been transforming ourselves quite a lot, and the fact to be publicly traded, of course, has not been, in any case, a hurdle. I would say that when we are facing tech companies, and for example, it's the case with Fintechs, because we are clearly competing with Adyen and others, we can see they are publicly traded too now. But the fact to be not a pure player, but to be, you know, a bank, an asset manager, a financial institution, diversified compared to a pure tech or fintech, can be a challenge in terms of investment because we see these guys investing massively, and for our shareholders, it's more difficult to justify to have this type of investment. So clearly, we need to be very selective in what we do to make sure we are not we are really investing on the right thing.
But this sounds like being selective, meaning being slow. No?
Just mean being cautious, maybe.
Sure. No, but I just to catch on the point where the fact to have, you know, it's not really between publicly traded and privately owned, but more between pure player on tech, where you have multiples and the valuation of pure tech players, and companies that have different businesses where you trade like the other banks. So on this, you can have a different capacity to invest in terms of.
But does that mean that you've got fewer resources to invest, that you're slower to invest?
Well, slowly. No, it's not a question of pace. It's we have to be
more cautious, just to make sure you're not blowing lots of money on something that isn't really going to be making a difference.
Exactly.
Javier, as a cooperatively owned, I mean, does that help? Are they kind of extra patient because really they just want the best service possible?
Yeah, at the end, in our case, in any case, it clearly is the right structure, the right governance structure for what we need to achieve, which is, as I mentioned, at the level of the underlying infrastructure, we're industry-owned. It is the right way to go. What is essential, though, is that internally within the company, we continue to maintain our existing culture of innovation, which has been taken to new levels now, moving the company into agile way of working, co-creating with customers, co-creating with fintechs, working on hackathons, internal hackathons, external hackathons with fintechs, participating, exposing our APIs to them so that we co-create with them, as well as becoming like all of us, the right kind of company for new talent to excel and to develop and to make an impact. So that's kind of the way we're going, and we're really comfortable with the governance.
Stefan, being publicly traded holds you back, gives you the time that you need, doesn't make any difference to you?
My experience in Europe is that the real test is not whether your owners are, whether the company is privately owned or publicly owned, is whether when you are privately owned, you are user-owned or capitalist investor-owned. Because in the exchange world, as still in some market infrastructures in Europe, in post-trading payments, when the big issue is how you manage the expectations of shareholders who are users as customers, who want basically to lower cost, and they might have different views. Some of them are more bullish about pushing for investment, others want the minimum cost, versus a sort of homogeneous set of investors who want just return on capital. So the beauty of being public is that you have a wide range of investors, but some of them are long-term, others are short-term minded, so you are more or less facing the same type of issues. What is very important is what they care, all of them, for an exchange or for an infrastructure, is whether it's robust, and what they pay is our capability to handle properly relationships with regulators. And regulators are okay with us investing to have, as we have recently released, 15 microseconds messaging. We get every second on Euronext platform as we speak, 120,000 messages, which is twice the number of requests per second on Google. So they are happy with us doing crazy things like that. As long as we are robust, that's why they are so demanding on cybersecurity. I do believe that the main issue in our industry is not going to be any more balance sheet related, it's going to be operational. The next big thing that will make us feel very bad is going to come from a cyber security fuck up. That's why within exchanges in Euronext, we use standards that are the ones of intelligence services, of nuclear power plants with segregated infrastructure for communications, like I guess in many payment systems. I guess what fintech world is not prepared for is a big cybersecurity fuck up, because most of them rely on open communications that are very porous to attacks. And I'm not saying that it's bad, I'm just saying that there is something embedded in a fundamental robust infrastructure, is that you care so much about security, which is your priority one, whereas when you emerge and address a niche market, which is very innovative and very smart, etc., this is your priority number 5.
Okay, Stefan, we've only got about 40 seconds left, so just quickly I want to ask the panel, like, what's holding you back in terms of innovation? Just give me one thing that's kind of preventing you from moving faster.
Nothing.
Nothing at all. Okay.
Our own capabilities.
Own capabilities, so maybe personnel, talent, that kind of thing. Okay, Francois.
I'm sorry, I'm not going to answer your question because I would like just to mention a topic. You know, as a banker,
seconds for
just as a banker, I see a lot of industries. I just want to say that the only industry today where it's not all about climate change is tech, and I think that's something we need to take into account.
Javier?
No, I'm with them.
What's holding Swift back?
No,
is there anything holding it back?
I think we have all the ingredients to become that infrastructure, to continue to enrich that infrastructure and become even more of that platform that our community, including fintechs, can use to take the financial ecosystem to new levels, both in innovation and stability.
And I know we are out of time, so I've got a yes or no answer question for you, Stefan. LSE's bid for Refinitiv, is that going to go through? Plain sailing, do you think? I'm
not the spokesperson of neither Refinitiv nor LSE.
Well, the LSE guy didn't give us much more information on that either yesterday, so thank you very much, gentlemen, for joining us there. Javier Pérez-Tasso, Stefan Boujnah, François Riahi, and Vladimir Verkhoshinskiy. Thank you, gentlemen.
Thank you.
Thank you.